And Watches of Switzerland says it sees a strong first half of 2021. That's despite headwinds weighing on the luxury sector. The UK's largest retailer for Rolex and other luxury timepieces has revised up its guidance for next year. The company went public in May of 2019. And we're joined now by Brian Duffy, CEO of Watches of Switzerland. Brian, good morning to you. And I see that you've improved your guidance. You've increased your guidance this morning. Explain what has gone into that. Is it that you were just too gloomy before, or do you really see some brighter trends leading you onwards in 2021?
A bit of all of that. We're performing very well. We've had a great first half. We're reporting our first half of the year, which ended in October. Within that, our second quarter was up 21.5%, well ahead of what we expected, ahead of what the market expected. We went into our third quarter rather, with a lockdown in the UK, lockdown in England, 4-week lockdown. So we were a bit concerned about that. We actually performed well, and particularly performed well when our stores reopened. So we're now travelling at plus 12% effectively for the third quarter. And it's a big quarter, obviously includes the Christmas season. So current trading is better than we were expecting. And our perspective for the year, I mean, a lot of our business is driven by the supply that we get. There's more demand for what we sell than we're able to supply. So that gives us the luxury of being able to, predict our business perhaps better than others. So based upon the perspective that we have, the current performance, it's led us to take our guidance up. We're saying it's between 11 and 14% growth for the year, coming off of a half year when we were down 2.6%.
So with the stores closed, how difficult was that? Do you do online sales? Is it possible for me to buy a watch from you online?
You could buy many of the brands that we sell online. You can buy Cartier, you can buy Omega, Tag Heuer, Breitling. You cannot buy Rolex. Rolex don't authorise sales online. So that naturally reduces that business. But we have a huge share of the online market in the UK. Actually, in the current quarter, we're up more than 100% online. Obviously, that reflects the lockdown that we had in England at the start of November. So yes, I mean, lockdowns, we've perhaps become better at handling them as the years gone on. We've had a variety of different disruptions to our business, UK and US. What we were able to do also during this last lockdown is click and collect, so people were able to come and collect the product at store, which definitely helped. And we've used a lot of technology. We're doing everything we're doing around 40% of our business now by appointment. And customers can go online, make an appointment. Makes people feel a lot more secure, I think, about coming to a shopping centre. We're doing remote selling through Zoom. We're doing remote introduction of new products through Zoom. Very, very active on social media. So we're very present in the digital world.
Okay.
So if you're interested in watches at all, you're hearing about us somewhere.
OK, and let me ask you, Brian, about the travel and tourism part of your business. I imagine some people buy whilst they're visiting London or visiting other parts of the UK. What are your assumptions for when that comes back? And how damaging do you think it will be if the UK is not going to allow VAT refunds? Is that something that is a big driver for that business?
But historically, it's been a reasonable part of our business. So historically, it's been around 17% of our business we would call tourist, international business. Plus, we have the business at the airport. And actually, it's one of the major headwinds that we faced, if you like, in the first half. First half last year, airport and tourism in total was 33% of our business. This year, it was 7%. So amazingly, we've overcome in the UK that headwind, and we've pivoted our business towards domestic. We're now 93% domestic, UK and US. So we effectively have coped with there being very little international business this year very well. We don't see the situation improving. First of all, we don't see a lot of travel happening in the first 3-4 months of the next year. And then, as you point out, thereafter, this government change, which is confirmed, by the way, that VAT and duty-free sales are going from the UK, which we think is a big mistake. We think it's a big miscalculation. Nevertheless, it's happening. But what it means to us is that the current situation will continue. And currently, as I've reported, we're doing pretty well.
Brian, a lot of people are buying right now, Bitcoin, gold, treasuries to store value, worried about the possibility of future inflation. Do customers buy watches for that reason as well? And if so, which brands hold their value the best? Are we talking just Rolex and Patek Philippe or Cartier and others?
Within all the brands, there are special products that are hard to get. But you're right. I mean, if you're purely looking from an investment standpoint, Rolex, Patek Philippe, Audemars Piguet are all difficult to get products. They're all brands that the demand for the brands exceeds supply. So naturally, the products are not only holding the retail price, very often sold at well above the retail price, and most commonly so. We call the whole category of luxury watches rational indulgence. There's cheaper ways to tell the time for sure, but you're buying a product made with precious materials that will be a family heirloom, that will preserve its value, that has liquidity if you ever had to look at that consideration. So definitely during a period when people are concerned economically, I think our category gets more attractive.